We've got, crypto. Some people are loving it. Some people are hating it. They say its time has passed and all. Where are you on this? Obviously a big, proponent here. Right. Where do you see it going?
Look, I think blockchain and crypto is one of the most exciting developments in our lifetime. I think when this is all over, we're going to be known, this generation, for COVID and for reimagining our financial system. I'm incredibly bullish on this. I think it's good to have a crypto winner, getting rid of some of the BS projects that are out there.
What about Bitcoin itself?
Look, I'm bullish. I'm buying Bitcoin right now. I think, anything.
So in and around $20,000, can I ever get back to 60 some odd?
Oh, I'll bet you my Porsche gets back to 60.
Really?
Yeah.
Okay.
Absolutely.
Life truly is good if you have that to bet. Jim, very good seeing you. Thank you very, very much. Predictions by
has been driving the markets in the latest few months, which is the Fed's monetary policy. So most analysts agree that as long as we don't see a pivot in the Fed's policies and we don't see the Fed stop raising interest rates, we are unlikely to see a recovery in the crypto markets.
Yeah, I have a different view on that. I actually don't buy that argument, right? I think people mistakenly classify Bitcoin as a risk asset. It's not. It can have periods of time where it functions similar, or I shouldn't say functions, where it acts similar to a risk asset because of the types of market participants that are participating in the market. When you have a very illiquid market like that, it is prone to booms and busts driven by market activity. People say, "Oh, well, it didn't act as a store of value." Well, no, it actually did. So the Fed from 2020 to 2021 printed half of all the dollars that existed in the history of the Republic. Okay, it's a long time, 246 years. Okay, here's an interesting thing. Bitcoin went from 10,000 to 20,000. Exactly what it should have done. But it went to 70,000. That had nothing to do with Bitcoin. That had to do with speculation and gambling. And so if we look at today, the fair value of the network has fallen back down to 20,000. Well, why is that? Well, fewer transactions, less writing to the mempool, smaller transaction sizes. There have been fewer actual participants in the Bitcoin network. And that's because people saw the price fall and they freaked out and they backed away. And so now we're at this really interesting place where the fair value and the actual value are very tight, and people are waiting for this big macro pivot. It's probably not coming, right? The Fed's probably not going to double the money supply again, so we're probably not going to have a devaluation-induced price rise.
Okay, so you're basically saying that, according to you, we don't need the Fed to change its monetary policies in order to see the next crypto bull market?
Yes, absolutely. And it would have to do with increased adoption, increased usage, more people holding it in wallets, more people utilizing it.
Welcome to the Cryptoteacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And we had Cointelegraph Giovanni interviewing Mark Yusko. And we know he's only going to give us half the truth. Now, Giovanni asked some great questions. And Mark Yusko stated that speculation and gambling is what caused Bitcoin to go from 20,000 to 70,000. Guys, we know in order to gamble, you got to have the money. And who has the money? That's right, the Fed, not your retail investor. And he's right, the Fed printed all that money. But not only did they pump stocks, they pumped cryptos. The reason why these crypto companies were able to leverage because we were at 0% interest. And now that the Fed moved rates up so quickly, we can look at the housing market and see how quickly things change. But he stated the Fed doesn't have to pivot in order for stocks and cryptos to go back up. And we know that's definitely not correct. But he doesn't talk about the fourth industrial revolution, the reason why all this is happening. Guys, we know they want the robots, algorithms, and drones to take over the economy. Remember, crypto means hidden message, hidden meaning. These cryptos are for the machine. They want the masses to use these stable coins, the programmable money. And the next bull run will be a utility bull run. But guys, we know we do not transact in Bitcoin and has never transacted in Bitcoin. We see the big banks and big corporations not only fund crypto from the beginning, but we're starting to see partnerships with more of these private crypto companies. But it is only a handful. Remember, the Fed is going to destroy 99.5% of these cryptos. Remember, guys, we saw the blueprint in big tech. We only got a handful of these big corporations that control everything. And you can go to your media, you can go to your food, it doesn't matter. It's these same small corporations. If you have my new World Order book, I told you that the corporations are going to become your government. And remember, the crypto teacher told you, because he knows when it comes to the new World Order, it's all planned out. You have a wonderful day.
A decoupling of crypto from equities. Is that correct?
Ultimately, I view these markets as not correlated and independent of one another. And people say, oh, but Bitcoin and the markets were correlated from November to June. Of course they were. In liquidations, in bear markets, in liquidations, everything's correlated. International stocks, emerging market stocks, US stocks, bonds, everything goes down. Again, because liquidations are different than bear markets. Liquidations are when there's too much leverage in the system and people are forced to sell. And again, they don't get to sell what they want to sell. They sell what they have to sell. And that's usually the most liquid assets. So I do believe that we're going to see investors look to their portfolio and say, higher rates probably means lower growth rates in the future, because we got tighter liquidity conditions, which means I probably want to have less exposure to growth assets. I probably want to have more exposure to diversifying assets that protect my portfolio. Well, bonds don't work in a rising rate environment. So how about digital assets? And my belief is that people will look at the digital assets and look at the long-term data and say, they're quite uncorrelated to other assets because the drivers of digital assets are not the same as traditional assets. Traditional assets are driven by economic growth, Fed policies, inflation. Crypto is driven by the technology itself, millennial adoption. That digital divide is so acute and so wide. And what people miss, I think, is there's 37 odd trillion dollars with a T, trillion, that's going to go from my generation, the boomers, to your generation, the echo boomers. That's a lot of money. That money's not going to stay at Merrill Lynch and UBS and invest in municipal bonds and IBM. I believe it's going to migrate into the digital asset ecosystem and put constant rising pressure on into 4 seasons, winter, spring, summer, and fall. You tend to get about a 15-month period for crypto winter and crypto summer, and then 9-month periods for crypto spring and crypto fall. We had crypto winter. We peaked in November of last year around 67,500. The fair value at that time of the Bitcoin blockchain was probably somewhere in the high 20s, right around 30,000. And we were too high. There was too much leverage in the system. That all got reversed when they approved the Bitcoin futures ETF instead of the spot ETF. And by approving the futures ETF, you basically allow big institutions, particularly banks, to go short the Bitcoin market without actually having to have exposure to the underlying Bitcoin. And that put downward pressure on prices. That led to liquidations of leveraged speculators and gamblers, led to the crash and the bear market. And I believe that relentless downward movement ended on June 13th. So I had tweeted right before that, right before Father's Day in mid-June, that we were stuck in this descending triangle. We were stuck around 30,000, and we were bouncing, but each bounce was lower, and it's this terrible chart pattern called a descending triangle. Well, we didn't get all the way to 15. We got to 17.5 on that wick down on the 13th, and so I think that was the bottom. I think that was the cathartic bottom. I think we're in crypto spring, and spring doesn't mean straight up, right? That's summertime, parabolic move, more speculators. Spring is kind of yuck, right? It's kind of windy, it's kind of rainy, it's kind of muddy, and we kind of just bounce along and consolidate. And I think that's where we are. I think we're in this 9-month period from kind of June to first quarter of next year, where we consolidate, we gather momentum for the next crypto summer, which we'll anticipate the halving in early 2020. 50 comes from simple math. It's 3 to 5 years, and it comes from simple math. That if we take gold, the gold value in the world is 10 trillion. But half of that doesn't count, right? It's chalices and jewelry and stuff that you can't really use. The other half is the monetary value, the bricks and bars that sit in people's, accounts and, Fort Knox and, Swiss bank vaults and all that stuff. That's 5 trillion. 5 trillion, okay? If you think about 21 million Bitcoin is probably less than that. You do that math and you get a 250K number. Okay, that works for me. So gold equivalence is about 250K. When would that happen? Look, if the next halving we add another zero, so we go from 10,000 to 100,000, and then we get that speculative bubble in 2024, 2025 that pushes us into speculation. Could we get to 250? 200 is probably more likely, but 250 is possible.
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort, and China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.